Welcome back, everyone. I'm seriously pumped to share today's explainer with you. We're going to take a critical, unfiltered look at the financial world's most prevalent traps. It's an exciting landscape out there, but man, it can be an absolute minefield for the unprepared. Today, we're breaking down a foundational guide that isolates the exact behaviors separating financial survival from, well, total self-sabotage. So grab a notepad because we are getting right into it. Now, just let this brutally honest quote from our source material hang in the air for a second. Most beginners lose money because of these mistakes. It really doesn't sugarcoat the reality, does it? When it comes to investing, you aren't just competing with the market, you're competing with human nature. And right out of the gate, human nature is literally working against you. So, I really have to ask you, will you be one of them? This isn't just some rhetorical exercise. If you're putting your hard-earned capital on the line, the stakes are absolutely make or break for your portfolio. We're treating this explainer as a survival guide, because without acknowledging these dangers, it's like you're walking into the wilderness without a compass. Okay, let's dive into our strategic roadmap for today. We'll start with the beginner's reality check, then tackle the trap of panic selling, the danger of insufficient research, and the habit of overtrading, before wrapping the whole thing up with your strategic survival roadmap. Right, let's kick things off with part 1, the beginner's reality check. We really need to confront the harsh reality of the market. Moving on to section 2, this is the trap of panic selling and how emotional reactions can totally destroy your stability. So, panic selling. The text defines this as emotional reactions, such as liquidating assets in a state of fear that severely undermine a portfolio stability. Basically, selling in a panic isn't just a bad tactical move, it is a dangerous emotional reaction. When fear takes the wheel, logic just gets thrown right in the trunk. Reacting to temporary market dips by dumping your assets, that permanently shatters your long-term financial stability. And this brilliantly illustrates the massive divide between two very different mindsets. On one side, you've got the novice financier, entirely driven by emotional reactions and panic. On the other side, the disciplined investor, who maintains portfolio stability through sheer caution. Look, when the market flashes red, the novice sees a disaster and runs for the hills. But the disciplined investor, they see a cycle, they hold their ground, and they survive. Okay, let's move along and see how this builds in section 3, the danger of insufficient research. We'll call this the ignorance trap. The guide points out that having no research, or basically insufficient investigation, acts as a primary driver of failure for those new to the market. Jumping into an investment completely blind, maybe just because a friend mentioned it or you saw a flashy headline, that is a guaranteed way to fall into a prevalent financial trap. Honestly, hope is not a strategy, and guessing is absolutely not investing. Let's be absolutely crystal clear on this one point. Insufficient investigation equals the primary driver of failure. If you don't look under the hood of the asset you're buying, this foundational warning tells us you are walking straight into a monetary loss. I mean, you wouldn't buy a house without an inspection, right? So why on earth would you buy an asset without looking at the underlying data?
Now for section 4, the habit of overtrading, or as it's often known, the action bias trap.
Overtrading is defined here as the behavioral habit of excessive trading that acts as a primary driver of failure for new investors. You know that dangerous psychological itch when you first start investing? It's like if your thumbs aren't frantically moving on your brokerage app, you must not be making money. It's totally relatable to want to panic check that app constantly, but excessive action is actually the enemy of success. So the crucial point here is the massive contrast in approaches. On the left, we have excessive trading, just constant, unnecessary action driven by this false expectation that you always have to be doing something. On the right, we have informed decision-making, which is all about calculated, disciplined choices. The harsh reality, the most profitable thing you can do in investing is often nothing at all. Calculated patience wins out over frantic activity every single time. All right, bringing it all together in section 5, your strategic survival roadmap. This is about categorizing behaviors for success. Let's quickly recap these categorized behaviors so they are completely locked in your mind. These are the absolute most prevalent traps to avoid. First, panic selling, letting emotional reactions dictate your moves. Second, no research, relying on insufficient investigation before putting your money on the line. And third, overtrading, falling victim to the habit of excessive action. If you can just recognize these 3 things when you feel the urge to do them, man, you're already way ahead of the pack. So, here is your dynamic 3-step strategic roadmap to counteract those traps. Step 1, avoid emotional reactions. Seriously, when the market drops, just step away from the screen. Step 2, investigate thoroughly. Do the reading, understand the financials, know exactly what you're buying. And step 3, trade with discipline. Once you make an informed decision, stick to your plan and ignore that itch to overtrade. This is exactly how you build a fortress around your wealth. Which brings us right back to our foundational warning from the source text. Don't make these mistakes. It is literally an urgent plea to remain cautious. Every single dollar lost to panic, ignorance, or impatience is a dollar that could have been compounding for your future. Do not give your capital away to these totally avoidable traps. I really want to leave you with this final critical question. Look at your own portfolio right now. Think about how you reacted to the market last week. Are your current financial habits setting you up for survival or sabotage? The roadmap is right in front of you, but the choice of which path to take is entirely yours. Keep learning, stay disciplined, and I'll see you in the next explainer.